In this video, we will explain what Polkadot is and what major upgrades it had. We will talk about some major news and partnerships happened in the last months. We will share some parts from the Polka Decode, the most important yearly Polkadot event from the 29th and 30th June, where the CEO introduced Polkadot Governance 2.0. We will talk about price and much more, so make sure to stick till the end or feel free to skip the parts that you already know. Polkadot is a Web 3.0 cryptocurrency and Layer 0 blockchain founded in 2016 by Dr. Gavin Wood, which is one of the Ethereum co-founders and worked as the Ethereum Chief Technology Officer until 2015, to then follow a different path, following its different ideas. Polkadot's main goal is to connect different blockchains and ecosystems. We saw until now very efficient blockchain networks, and most of them fail on one thing: interacting with other blockchains out of their network. Here it comes Polkadot, also called the blockchain of the blockchains. It is now accelerating towards a cross-chain future, and the ecosystem is more active than never in 2022, with many parachains developing, launching and escalating the network to the next level. But we will see this shortly in more details. Polkadot was built by Parity Technology, a core blockchain infrastructure experts based in UK, and its development was coordinated by Web3 Foundation, a non-profit based in Switzerland which helped to raise over $250 million between 2017 and 2019 for the development. Polkadot, in fact, had one of the most successful initial coin offering in blockchain industry, and its main net launched in 2020, so it is still relatively new. The network is built by a main blockchain called Relay Chain, which is not smart contract compatible, and it can process up to 1,000 transactions per second. The Relay Chain supports parachains, which are second-layer blockchains that connect to the main blockchain. They are smart contract compatible, and there can be 100 maximum parachains at a time. Parachains are a huge expansion to Polkadot ecosystem, and to be able to connect to the main blockchain, they must win the auctions. These auctions are won by the projects that have the biggest funds allocated to them from founders and the community. This fund allocation, it doesn't have a specified time. It is checked with a snapshot in a random moment, so the projects have to always keep the funds there to have the chance to win the slot. This way, the most financially supported projects on Polkadot can win the slots and lease it for a maximum of 2 years, period in which they need to keep locked their coins. This is positive for their economy, but it has been on a decline. In fact, projects are allocating always less on auctions. If you want to support a parachain, you basically have to buy DOT and put your funds into the main blockchain by delegating to the selected nominator. This way you are going to provide them this liquidity for a period of time, and in exchange as reward, you will get the project's token, plus your coins at the end. The goal of these parachains is to bring down costs and allow other developers and crypto projects to build on Polkadot network, taking advantage of the low fees of the network. However, they do not need to use coin for fees. They don't need necessarily a token or coin to operate, or they can create their own cryptocurrency if needed. Parachains are also used to build bridges to other blockchains, and we are going to make some examples later on. There are then another kind of parachains called parathreads. These works like parachains, but they do not have the 2 years time frame and the auction to win. They are basically pay-as-you-go parachains, mainly designed for institutions that wants to use the network benefits. The network uses a nominated proof-of-stake mechanism, and it is powered by their token, DOT. As holder, you can either run a validator node, or you can be a nominator. To be a validator, you will need to lock for 28 days at least 1.8 million DOT, which is worth over $12 million, so it is quite high, and as reward, you will get around 15% yearly. Validators are randomly selected. At the moment, there are 297 validators. Once fully mature, the network should have around 1,000 validators. Nominators, on the other hand, which can be compared to delegators, must delegate and lock for 28 days, at least 128 DOT, for 14% yearly rewards. There are over 27,000 nominators at the moment, and in this case, basically the holders of the native coin can delegate their holdings to validators, which have the role of securing the main network, called Relay Blockchain. To make a comparison, Cardano, for example, has already almost 3,000 pools with the same goal of securing the network, and they have over 1 million delegators with their liquid staking, which includes no lockup period and staking unstaking feature at any time. Before we continue, I just want to clarify something that you might have forgotten. We only do educational entertainment, and my job here is not to be your financial advisor, so please do your own researches before investing. The ecosystem as mentioned above, it is powered by DOT, their native cryptocurrency. DOT is first of all a governance token. It is used to pay fees on the main relay chain only, not on parachains. It is used for staking to secure the network and bonding for new parachains. It has a current supply of just under 1 billion tokens at the moment from the top 10 cryptocurrency. It has one of the highest staking rewards, around 14% yearly, and currently more than 50% of the total supply is at stake. Polkadot is inflationary, and it doesn't have a fixed maximum supply. It will slowly increase over time, creating an annual 7.5% inflation rate, which should decrease over time. If you want to stake, you can always do it on different platforms or exchanges in an easier way for lower rewards and less lockup period. But the most secure way, and the one with the highest rewards, is on Ledger with a Ledger Nano X or Ledger Nano S hardware wallets. These are physical cold wallets that secure your private keys in a safe chip and are never exposed because are not connected to the internet. You will have to send your DOT into your account on Ledger Live, and from here you can select a validator. Remember that validators are randomly selected, so it is best practiced to delegate to different validators in order to increase the chance to get your high rewards. Also keep in mind that only the top 256 nominators get paid, so when you delegate, make sure to be in the top, or if you are oversubscribed, you will not get any rewards. When you select a validator, the commission they keep is also important. The higher this is, the less rewards you will get. Lastly, to support parachains, you can follow the same process, but you will have to select the right validators in order to delegate your DOT and to get the rewards in the new token. Gavin Wood, the CEO, recently announced that they will upgrade the staking system in the future, and I am going to explain what they are planning to do shortly. DOT is trading at around $6.7 per coin at the moment, and its market cap is just under $7 billion. It is down 88% from its all-time high, at around $55 per coin back in November 2021. Polkadot's price reached an all-time high. In November, after the announcement that the relay chain was ready to host parachain, the addresses increased by 150% in the last 8 months. But after the peak in November, the price decreased a lot in the past months, mainly because the all-crypto market has been bearish, affected by macroeconomic factors. The questions are, of course, if it can go lower, if we should sell out coins and buy lower, or if a bottom is in and it is time to buy more. We are going to give an answer to all this question soon, as I will also share what I will personally do, so make sure to watch till the end. It all depends on how Bitcoin performs. First of all, if Bitcoin stays around this range of $20,000, I wouldn't be surprised to see Polkadot going further down, as crazy as it might sound, because typically altcoins tend to depreciate against Bitcoin in a bear market. If Bitcoin turns bullish, we will likely see Polkadot as one of the best performers, as the ecosystem is expanding day by day, and it never really reflected on the price in the past 2 years as it should have done, because it was all a vision and its parachains only recently have started to scale its ecosystem. After 5 years of research and development, in fact, many parachain have started to be deployed. If until now we could have seen it as just a visionary project, from 2022 many parachains projects are launching, creating an exponential growth to Polkadot's ecosystem. Most of the parachains lease periods started at the beginning of the year, and they will last for 2 years. During this period, they will have to keep their DOT locked on the network, which could lead into higher prices as the supply is locked and the demand increases. Already 21 parachains and 9 parathreads launched, which locked over 30% of the circulating supply, and each different projects is unique, bringing many utilities to the ecosystem. Many other parachains will keep launching and developing to reach a number of 48 fully functional parachains deployed by 2023. This means that the locked DOT will increase over time, decreasing the circulating supply and increasing the price. These are the parachains that have already launched in the ecosystem. This includes Moonbeam, the first fully functional. Its lease period and DOT lock time will be from last December until October 2023. It is a smart contract platform and Ethereum compatible, which expands Polkadot's market into the Ethereum ecosystem. If you want to see it in more details, I'll link it down into description. Akala Network is an other smart contract platform, which Coinbase Ventures officially announced to invest in, Ethereum-compatible, optimized for decentralized finance. Its lease duration will be secured until October 2023 from last December 2. They have also announced that they want to lease the parachain for 6 years and then migrate to their own native blockchain interoperable with Polkadot. ASR, a multi-chain smart contract platform interoperable for all Layer 1 blockchains like Ethereum, Cosmos, Binance, Solana, etc. Parallel Finance, which is an interoperable decentralized finance protocol that aims to bring over 3 billion users on board on the Polkadot ecosystem. Affinity is a new initiative launched by Engine. Affinity aspires to be the next generation of blockchain for NFT with minimal fees and highly interoperable, something that until now we only saw NFT limited on different blockchains. Centrifuge is an other DeFi protocol that aims to make credit more accessible for small businesses and will provide a stable yield for investors, and many more, but I am not going into details now. In these past months, many things occurred, so let's mention the most important ones. Polkadot partners with Frank McCourt, the LA Dodgers baseball team owner. The partnership will fund Polkadot with $100 million to create a decentralized social media protocol called Liberty. Last week, they then announced that they won their parachain slot called Frequency. Parity Technology partnered with Clayton, a South Korean crypto project, which was created by Kakao, one of the country's largest tech companies. Clayton is building an open-source public blockchain for all who wish to build, work, or play in the metaverse. Parity Technology announced that they completed a major upgrade for its programming language for smart contracts called INK, which should make much more easier for developers to build on Polkadot. Parity Technology also announced an important upgrade in regards to his Parity Signer mobile wallet. Polkadot's most popular parachain, Moonbeam integrated Lido, a liquid staking giant. This will bring liquid staking not just to the Moonbeam network, but to the all Polkadot's ecosystem. You can now stake your Polkadot's coins without a lockup period time. Moonbeam also integrates with Chainlink to provide price data to Polkadot's developers. Akala, a popular Polkadot's parachain, announced a $250 million development fund which will back companies with use cases for the Akala's crypto-backed stablecoin. Wisdom Tree, an exchange-traded fund provider, recently launched exchange-traded products for Polkadot and other blockchains. In April, Tether stablecoin enters the Polkadot ecosystem on Kusama, Polkadot's testnet blockchain. At the beginning of March, the official Ukraine crypto wallets started to accept crypto, and Gavin Wood, the CEO, donated $5.8 million. On the 29th and 30th June, Decoded took place in New York, the biggest Polkadot conference. In an effort to further decentralize the event, Moonbeam published the proposal to take over the organization of the event in collaboration with other parachains teams and developers to organize these 2 full days of talks, panels, and workshops. At the same event, Gavin Wood took the chance to introduce to the community governance too. The main goal of upgrading this would be to make the network more decentralized. Have a look at the presentation that Gavin held.
So the current state of governance, which I presume most of you are at least a little familiar with, but in case you're not, it's a tricameral system, so 3 chambers. There's a technical committee. They don't do all that much, but they have some sort of powers. The council, who do quite a lot, have quite a lot of powers, and the ultimate power still rests with the token holders, who sort of vote on stuff as it comes up. Well, the solution is twofold. First is lower the barriers. So make stuff easy, cheap. So we make it easy and cheap to make a proposal for how a protocol should change, for what the network should do. We make it easy and cheap to get those proposals voted upon, and we make it easy and cheap for people to vote on them. We also remove these centralized artifacts to the degree that we can. So we remove the council, we remove the technical committee. All right, great. Sounds easy. Unlimited referendum on everything all at the same time. In that, if you can have unlimited referendum from everybody all at once, then you've got all these kind of potentially bad proposals coming in and you've got like limited number of responsible actors kind of shooting them down before they get enacted and like do something bad for the network. So how can we make it safe? Well, there's a few ways that we can make this stuff safe. Right? So one of them is that we limit the number of active decisions going on at the same time. Right? So there's not too much for anyone to consider. The more things that there are to consider, the less time you can consider each one, the higher the chance there is that something will go through that you didn't expect. Now, safety and agility, it's a bit like, this old security and convenience. It's a trade-off, You got a slider bar, you can be very safe, but not very agile, or you can be very agile, but maybe not so safe. Now, governance version 1 restricted activity and introduced trust, right? Introduced these central bodies, and it restricted the amount of activity that happened to like basically one referendum a month. And so it sort of became safe for that reason. But we want something more agile, some more fast-moving, more flexible, and less centralized. So governance 2 allows us to use many more of these elements of making governance safe in order to get like a more optimum balance, and an optimum and adaptive balance, by which I mean that for different kinds of referenda, we may have different kinds of safety measures. So what we're essentially doing is we're going to restrict things like throughput. We're going to increase things like the periods, the voting periods, the time, depending on the theoretical or the expected damage that could be done by any particular referendum. If the referendum if we can classify a referendum as being like low impact, then we don't need to be quite as conservative with our safeguards. And this is it. So not all referendums, not all proposals are equal. Right? In governance version 1, they were all treated equally. For those of you who have some sort of technical knowledge,
if you are interested, I will link down below the all presentation, which lasts 1 hour roughly if you want to watch it. Moving now to the concerns on this project. The main and only concern I have about Polkadot is that their token might not have a high demand, considering it is only used for fees on the main relay chain, for staking, governance, and bonding to win parachain's auctions, amount which has been on a decline. So technically, the ecosystem can grow with its parachains, building their own cryptocurrencies and creating demand for those. If the demand for Polka never really increases, it might be imbalanced with its new released circulating supply, which might result in the price being held down. There is this risk, but I also think that there is the chance of DOT to be the backup and secure main asset of the ecosystem, where many DeFi projects will create more utilities and demand for. Polkadot is becoming always more interoperable with other blockchains, which will increase the market exposure, and it will definitely have a positive impact. They recently launched the first XCM or cross-consensus messaging. Akala and Moonbeam are now connected and interoperable. This is a mechanism that allows all parachains to communicate with each other without a bridge. Also, Moonbeam is Ethereum compatible, and other bridges will be enabled for an interoperable future. Many developers are building on the Polkadot blockchain to grow the network, which will create demand, and it will reflect on the price in an exponential manner once the market gains confidence, and we go back into a bullish scenario. Polkadot, it is a pretty new project, considering it launched its main net in August 2020. Since then, it always had a growth, and we never saw this low levels since late 2020 before the bull run. So it might be a good time to start buying some. But I am personally not going to buy more Polkadot, not until I will see a sign that this downtrend might start to reverse. And probably soon we will see some significant movement as the price is approaching the 20 days moving average. However, I'm going to hold my GOT coins on stake for the time being so I can keep earning rewards, which will be much more valuable once the price will rise again. Interesting to notice how, compared to the other blue-chip top cryptocurrencies, Polkadot did not have a significant growth. This because just now from December, the network is escalating while we are in a bear market. And this is actually its first bear market. I think Polkadot will have bright times in the future. When this bear market will end, it is likely that Polkadot will come out of it stronger than before. Polkadot is highly scalable, interoperable, and a secure blockchain, and I am positive about this project in the long term. If you want to learn more about the most promising, first fully functional parachain Moonbeam blockchain, watch this video. Lastly, don't forget to let me know in the comments below if you think DOT can go lower in a short term and if you hold any tokens.